All right, so today we're diving deep into liquidity clusters in financial markets.
Okay.
And, when you think about it, traders are always looking at their charts, trying to find signals.
Right.
And these clusters of buy and sell orders, they kind of act like those signals.
Yeah, like little landmarks.
They're like those potential support and resistance levels, almost like X marks the spot on a treasure map.
Yeah, exactly.
Show us where the price might bounce or break through.
But here's the thing, you can't just see the cluster and assume that's all you need to know.
Oh, so just finding the X on the map isn't enough.
Nope. Those clusters, they're just a snapshot of the market, just one moment in time.
Okay.
To really understand what's going on, we need to understand the why behind them.
The why?
Yeah, the market intentions.
Okay.
And that's where volume comes in.
Oh, okay. So how much is actually happening at that level?
Exactly. It's the difference between seeing a footprint and seeing a whole bunch of footprints.
So a big cluster, it might not actually mean much if the volume isn't there.
It's like if you have a huge buy order cluster, but the selling volume is really weak.
Okay.
The price is probably going to bounce off that cluster because those buy orders, they're going to absorb that selling pressure.
So it's like a wall that the selling pressure can't break through.
Exactly. But what if the selling volume is massive?
Okay, see where you're going with this.
That wall could crumble. Those buy orders could get completely overwhelmed.
So how do we actually see this playing out in real time?
That's where order flow analysis comes in.
Order flow.
Yeah, it's basically looking at the relationship between the market orders and the actual price movement.
So are we talking about reading the mind of the market here?
Well, kinda.
I was talking to a colleague the other day, and he was saying he uses order flow for exactly that, to figure out who's in control.
He's on the right track. Imagine you're looking at a price bar on a chart.
Okay.
And you see that there were, let's say, 5 buy market orders and 7 sell market orders.
So at first glance, it looks like there's more selling pressure?
Right. But then we dig deeper. We look at the volume traded on the price, increases the uptick volume.
Okay.
And let's say that was 8.
Okay.
And the downtick volume was only 4.
Wait, so even though there were more sell orders, the price actually went up more often?
Yeah, and this is where understanding order flow gets really interesting.
Okay, I'm intrigued.
We can take this information and calculate what's called cumulative delta volume.
CB.
Yeah, CDV for short.
Okay, I've heard of that. So how do we calculate that?
It's actually pretty straightforward. You just subtract the sell orders from the buy orders.
So in this case, it'd be 5 minus 7?
Right, which gives us a CDV of -2.
Negative, just like we thought initially with those sell orders.
Exactly. But we're not done yet.
There's more.
Oh, yeah. We also need to consider what's called the cumulative delta uptick versus downtick volume.
Wow, that's a mouthful.
Yeah, it's a bit of a tongue twister, CDUDTV for short.
Okay, CDDTV, got it.
And we get this by subtracting the downtick volume from the uptick volume.
Okay, so 8 minus 4.
You got it.
Yeah.
Which gives us a CDUDTV of +4.
Positive this time. So now we have a negative CDV and a positive CDUDTV. Are those like conflicting signals?
Not exactly conflicting, more like two sides of the same coin.
Okay.
And to really unlock the insights here, we need to introduce you to something called market-making value.
Market-making value. Okay, this is where it gets good. I can feel it.
This is where the magic happens.
Market-making value. So what is that exactly?
It's like our secret decoder ring for the market. It tells us what's really going on.
Okay, I like the sound of that. Tell me more.
So we take the CDUDTV, which we said was 4, and we subtract the CDV, which was -2.
Okay.
And that gives us a market-making value of +6.
+6. Okay, so what does that tell us?
That positive value, that's key.
Okay, how so?
It means that even though we saw more sell orders initially, somebody was stepping in to buy.
Interesting.
Somebody was absorbing that selling pressure and pushing the price up.
So maybe those market makers we were talking about?
Could be. Point is, a positive market-making value like this, it suggests there's more going on beneath the surface.
It's like those footprints we were talking about earlier.
Exactly.
We see a bunch of them and we realize, hey, someone already found the treasure.
Exactly. And in this case, that treasure is buying pressure.
So instead of just looking at those initial buy and sell orders, we're analyzing how the market is actually reacting to them.
Precisely. It's about understanding the flow of the market, the intentions behind the numbers.
So we're not just watching the football game, we're analyzing each play.
Exactly. Are they trying to score quickly or are they running out the clock?
I like that analogy. So how can we actually use this market-making value in our own trading?
Well, let's say you're looking at a stock and you see a strong positive market-making value at a key support level.
Okay.
That's a good sign that there's some serious buying pressure there.
So it could be a buying opportunity.
Potentially. It's like getting a sneak peek at the market's playbook.
I like it. So we're not just relying on one indicator, But this market-making value gives us an extra layer of insight.
Exactly. It's like having X-ray vision for the market. You can see things that others might miss.
So we're not just finding the X on the map anymore.
Nope.
We're figuring out if there's actually treasure buried there, or if it's just a bunch of fool's gold.
We're reading those footprints, analyzing the battle between buyers and sellers, and using that information to make smarter trading decisions. It's like we're looking over their shoulder, seeing what they're seeing.
And then we can make our own moves based on that information.
Exactly.
Yeah.
You know, if you were trying to navigate a new city, you wouldn't just rely on a map, would you?
No way.
You'd want to know about traffic, construction, detours, all that stuff.
Yeah, you want the inside scoop.
That's what understanding order flow is like. It's like getting that insider knowledge of the market.
So instead of just finding that X on the map,
Right.
we're figuring out if there's actually any treasure buried there.
Exactly. And if it's worth digging for.
We're reading those footprints, analyzing the battle between buyers and sellers.
And using that information to make smarter, more informed trading decisions.
This has been eye-opening. I feel like I've learned a whole new language.
It is a language of its own.
The language of the market.
And once you start to understand it,
Yeah.
the possibilities are endless.
So for all you listeners out there, remember, it's not just about the levels you see on the surface.
Nope.
It's about understanding what's happening beneath the surface.
The volume, the
Right.
order flow, the intentions.
Because that's how you really start to understand what the market is trying to tell you.
Exactly. You become fluent in the language of the market.
This has been another fascinating deep dive.
Thanks for having me.
And for everyone listening out there, happy trading.